Disclaimer. Do not make this trade. Seriously, don't. This video is for educational purposes only and placed by a professional trader from Maverick Trading. Maverick Trading is sponsoring this trading experiment with a $100,000 trading account. To trade for Maverick Trading, you can submit an application for stock, option trader or currency trader from the link in the video description below.
Welcome to trade number 89. This is Rob, and what are we doing here in this experiment? We are showing that the biggest conspiracy is not that the earth is flat. The biggest conspiracy is that all the trading books pretty much only focus on the entry and not the exit. So what we're trying to show here is that you can make money just from having a solid exit strategy. Here we are to trade number 89. And it's been a while since we've done a Forex trade, and the Forex market is running and doing great right now. So let's go do a Forex trade. I put the 8 major currencies that we trade at Maverick up here on the wheel, and we're going to go ahead and spin it. The first spin, we will then remove that currency from the board. We'll spin it again, and that's going to give us our currency cross. So our first spin is going to be our first currency. And let's see what it is. It looks like we are going to be trading the pound. I'm going to go ahead and hit the remove button. That's going to remove that from the wheel. And now we're going to spin it again. So it's going to be pound. What's it going to be? Pound Aussie. All right, we're going to be trading the pound Aussie cross on trade number 89. We don't know if we're long or short. Let's go ahead and look at a chart and see what it's doing. All right, so here's a daily chart for pound Aussie. And you can see it's been fairly sideways, trading between 186 at the low, 195 at the high. We are pretty much right in the middle of the range, but we are going to make the trade based off the slope of the 13 EMA, and you can see that we are now sloping higher. So the fact that we're sloping higher means we are going to be long this currency, and right now the currency is at 190.71. That's the current market price, and the current ATR is down here at 0.0102 or 102 pips. That's going to be our trade. It is May 21st. We're going to be trading pound Aussie to the long side. Current price is 190.71. Our ATR is 102 pips, which is 0.0102. So we're going to double that to 0.0204. So 204 pip stop. That's going to put our initial stop right down there at 188.67. We just need to figure out our position sizing, and then we can go ahead and make the trade. At this point, we have 2 open positions. We have Walmart and Pfizer. Both of them are mildly profitable at the moment. Let's go ahead and check our account value. Our account balance is $110,287. Here we are at the Baby Pips position size calculator. Let's see our account balance, $110,287. Our risk percentage was 1%. Our stop loss in pips, we're going to put that as 204. It's actually entered as pips. And we're going to find that pound Aussie cross. There it is. And the current Aussie US dollar bid price, let's go check on that. All right, 66.65. So 66.65 is the current Aussie US dollar bid price. It needs to know that because with the currency conversion, everything's converted back to dollars. So we're saying we want to buy pound against the Aussie, but we want to buy it in US dollars. Look, just use the calculator. It does it all for you. All right, it's telling us our position size is going to be 81,113. 81,113 is going to be our position size. Go ahead and put in pound Aussie. We are going to be long. This is where we put our position size, which is 81,113. Throw it a little bit above the limit price. Go ahead and attach that trailing stop order. And the trail is going to be 0.0204. 0.0204. Let's go ahead and hit submit. Come on. All right, it is being finicky. Every so often it does this. Interactive brokers software, our big complaint about interactive brokers, it's great in every way, but boy, their software is finicky sometimes. So look, I've had this issue before. If I remove the trailing stop loss, the trade will go through, and then we'll just go ahead and attach a stop to it. That's no big deal whatsoever. Let's go ahead and enter. All right, and that was filled at 190.68.3. So 190.68 is going to be our fill price. So let's just go ahead and put in our sell order. So we're going to put in a sell stop. We use our same quantity, and we're going to use, oh, I forgot to put a trail order, same quantity, and our trailing stop is going to be 0.0204. And we'll make this good till canceled. All right. Like I said, it's a little finicky sometimes, but we basically was able to break that apart. We entered the trade, and then we entered in the trailing stop order after. All right, the trade is done. Let's put this in the books. Trade 89 has been entered. We are long pound Aussie. We've got our trailing stop in there, and we know the rules. We're just going to do the same thing we've done on all the other trades. We have no control at this point. No control whatsoever, and that is the biggest fallacy, is that once you click that button and you are actually in a position, all the things that you could control, they're gone. Now, the only thing you can control is your exit at this point. That's it. And if it goes against us, hey, look, we've already figured that out. Our trailing stop is going to take care of it. If it goes for us, well, we have some rules to follow. If we get to 2x ATR, we move it up. If it gets to 4x ATR, we tighten it up, and that's it. That's all we do. This position will sell itself. We have no idea what's going to happen. It could be the best or the worst trade in the world. We have no idea. At this point, we are simply a spectator. Remember, position management works because of consistency, not because of you're a genius. All right, take care, everyone. Goodbye.